Hi, I'm Mortgage Mike, and welcome to another weekly edition of your Mortgage Industry Update. Today's topic is on credit reporting errors, more specifically, credit reporting errors and how they affect the FICO score. So, it's interesting. There are three bureaus out there that report credit information to creditors. That's Experian, TransUnion, and Equifax. Now, who do we think those bureaus serve? Do they serve us as the consumer, or do they serve the creditors, the ones that are actually reporting on our credit behavior? Well, the people that pay their bills are the creditors. So there's an interesting study that's going on. The Fair Trade, the FTC had mandated that there be a study of the credit reporting bureaus, an 11-year study, and that study is about to come out next year. It's about to be complete, and it'll come out next year. Well, the interesting thing is that this study is to focus on, well, what happens in regards to the credit bureaus and their reporting of information. Are there errors? How are they resolved? Really just looking at the bureaus and trying to hold them accountable, honestly, to us as consumers. So what happens is that the Industry Trade Association for the credit bureaus decided to launch a preemptive strike, and they put together their own study. And in this study, what they're trying to prove is that, well, yeah, of course, credit reporting errors exist, but there's not too many of them, and it's easy to get these things resolved. Well, so what are the results of their study? The results of their study, based out of like 2,300 respondents, that they hired a marketing firm that goes out and grabs consumers and pays them to do surveys. They had 2,300 respondents, 300 people, I believe, actually participated in the study, and what they did is they gave them a copy of their credit report, and they said, please look through this. If you have any errors, fix them, and then let's report back on how well the process went. Well, the interesting thing was that out of those 300 people, what they found was that 1 to 2% of the credit reports contained errors, and that they were resolved quickly. Well, the resolution was resolved quickly because they gave them a dedicated phone number to call. At least one of the bureaus did. Instead of calling into the general number, they got a dedicated phone line to have somebody help them resolve their issues immediately. So it's interesting that when they begin to report that, there's only been a 1-2% error rate on the credit reports, and not only that, that the consumers that had the errors were highly satisfied with the level of service that they received. Well, gosh, I would be too if I got that kind of red carpet treatment. However, I'm a mortgage loan officer. I pull credit reports every day, and I look at them, and I can tell you that there are credit reporting errors on probably every credit report that I pull. Not only that, those credit reporting errors can have a significant impact in the cost of financing. For example, the old gold standard for mortgage financing was a credit score of 700. Then it moved it up to 720. Now it's 740 to get the best interest rate out there from a conventional standpoint. So what does that mean in regards to interest rate? Well, if you're looking at anywhere from a 660 FICO score to a 740 FICO score, it could mean the difference between an 1/8 to 5/8 of a point interest and difference, 5/8 of a point difference in interest rate, which is a huge cost of financing when you begin to look at it. And not only that, one error, if say you had a 750 FICO score, could be enough to bring you down to the 739 mark, which means a difference in pricing, or to the 719, or the 699, or the 659 mark, and you're 1 point off from having the better rate, but because there's reporting errors that impact your credit score, no, you know, that's the way it is. So what I'm telling you is, as a loan officer, I think that we're probably seeing errors on credit reports that affect credit scores 20 to 25% of the time. It's not 1 to 2% of the time. And honestly, I tell my clients what to do. It's not an easy thing to get resolved. It takes a lot of effort and a lot of help with other creditors or the bureaus to get these things fixed. So there's your good news for the day, right? Credit reporting errors are big. They're out there. It's time that we begin to look at this. And we have advocates that can help us with our credit scores, because we are, in the end, our credit score, and it's reflected in our financing. All right, I'm Mortgage Mike. Thanks for watching. I'll see you next week. Spread the love, heal the world.